right. Twitter. I think I did a podcast back on Twitter when I started these podcasts, but I wasn't doing Stan Weinstein back then. I wasn't revisiting it. And let's give it a go, guys. twtr. And that is on the New York Stock Exchange, technology sector, industries, internet services. And look at that. I think that was IPO in 2013. I don't like these high wicks. Not tweezer tops, but the buyers were in control, got refuted. Buyers got some momentum, refuted. Usually signs of tops. And you see one here. Another one here. Here. Not to the same extent, but check it out. Whoa, 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 look at that. Right here. Another one here. Short-lived, pullback. But now look at the monthly, guys. This is the monthly candle chart, and we do that before we do the weekly. I had a breakout back here. Nice base. Look at that. Love it. Target reached. I'll do the arrows. Even the most greedy of targets. The most greedy target is the target that is further away from the breakout line, which has a further away target. This target here is more probable of reaching its implied measure move than bigger targets. Reach its target, broke out 1 or 2 months later, pull back, 12-month moving average going upwards, and look at that, bam, tweezer tops, or almost, and down we went, testing the 12-month moving average. We still closed above, so that's still hopeful for Twitter. September coming up soon. Keep an eye. You don't want to be in a stock if it's closed below the 12-month moving average, and you don't want to be shorting a stock that is above it. But that's just part of the details, guys. This is just us looking at the higher time frame. Now let's zoom in on the weekly to do Stan Weinstein. Stage 4, stage 1, and after got out of its Ichimoku cloud, defined resistance, went sideways, thinning out the cloud. Oh, wait, time's moved on. Resistance not there anymore. Time to explode. And look at that, it had beautiful breakouts. I call them the embryonic breakouts. Let's remove drawing tools. Arrow. Just look at the volume and then just bring a line up. When you see this crazy volume here, twice the average of the previous 4 weeks, usually it coincides with a horizontal breakout line. And look at that. That was pretty nice. Right back here. Where's my arrow? Crossing over the 0 line. Starting to outperform the SPX. That's a triple confirmation right there, guys. At a stand. Stage 2. Sideways move. Another breakout. Crazy volume right here. Continuation move. Going upwards. Is there another one here? Pull back. See these lows, not lower than the previous lows, always closing above the 12-month moving average. These are all the reasons to stay in at this time. And up it went, top. And where would you have exited? Unless you could have drawn maybe here. Let's undo that. Unless you could have, let's see here if we would have done here. Here you could have said pull back right here. Right here. I used the indicator, the Mansfield indicator. Never short a stock when the Mansfield is going up, and never buy when it's going down. So if ever you want to know if it's a pullback and if you should move your sell stop the Stanway along the way, then wait for it to do like a V shape. So when there's a V shape, that means it really pulled down, it went back up, and you would have moved your sell stop as a trader under here. Sell stop would have been moved here. Sell stop would have been moved here. You see, I'm looking here at this lull here. Sell stop move here. Sell stop move here. And here you go. Okay. Oh, that moves on. You would have exited here. And now it violated the trend line. Even if you'd be doing it the investor's way, you would have exited here. And now look where price action is below 30 average. That means it's starting to drag it down. And you even get here red. Remember the Mansfield indicator, the way it's made this one? The author added color code. If it's red, it means the 30 average is declining. It means you're underperforming the SPX. You're under the zero line. And the price action is below the 30 average. And that's red. So it's mostly, when you see your green, you're probably in a stage 2. And usually it's pretty good to get it close to the beginning. And look at that. When it exits, you're out right here. So it coincides. Those three criteria that it verifies, pretty much in sync with some of Stan's important tenets, his observations to know if you're in a stage 2, stage 4, or when they end, where they enter transition stages. So I love this. Probably one of the reasons I'm on tradingview.com is just to have this Mansfield relative strength indicator. I looked around, I couldn't find anything equivalent to that. Maybe I could have programmed it myself. I didn't. So I'm on tradingview.com, guys. So now it's the inverse that's going to happen right here. We're going down from above zero down, so underperforming. That very negative or very positive, the transitions when you go from one side to the other. And what else? Pullbacks. And now down, then close above the 30 average. What else? Lots of clues, lots of clues. Keep looking at the chart. This is not a 1, 2, 3 down. It's almost a, I forget what you call that Japanese formation there. 3 up, 1 down. And that's a reversal sign of that move going downwards. Look, the last line of support, it's right here. It's that Ichimoku cloud defined support. So what we could maybe anticipate something like this. And then by that time, 30 average is going to be down. I love it. I love it when stuff coincides, when the 30 average bounce coincides with the test of that resistance. That support and alternate resistance, a wall. And then maybe keep going down. And then down. Okay, I don't know if it's going to be that. What we're going to look at also is for increasing red volume. Stan saw that as a negative. So increasing red volume, see on these candles here, really went up. And I'd love to see some more increase of those red candles on the way down. Stage 4, definite stage 4, just entered. On the monthly, we're already having really close to breaking down below the 12-month moving average. But you have those crazy tweezer tops, which for me signals the top, and might bring us all the way down back here to this previous resistance. Previous resistance, now turn support. That big base was here. God, Twitter. We could do one more thing. We could check the sector. It was in informations technology. Still an uptrend, and it's industry, internet software and services. That one's starting to slow down. It's getting some price action really close. Look at those crazy candles, right? Remember? Whew. Buyers all tried, nah. Then they lost control. Buyers again lost control. Never able to continue the trend. And all these tests, they end up creating resistance line. Pretty cool, right? Trying to give a look. Yeesh. And even on the weekly, starting to be stage 3 territory right here, and borderline stage 4. As soon as the 30-moving average starts declining, that's going to turn red, and you're going to be in a stage 4 for the internet, software, and services industry, guys. All right, that's it for Twitter. Stage 4. Ciao, guys. Going down.